So good afternoon, everyone. Thank you for joining us for today's webinar. So my name is Hakeem. I work with Tally Solutions for the Middle East region, and I'll be your host for this insightful session. So as you all know, that the news of corporate tax is one of the biggest news after VAT. So on 9th December, the Ministry of Finance officially announced that corporate tax on businesses' profit will be applicable from 1st June 2023, and the most businesses will become subject to UAE corporate tax. We understand that you all will be very eager to know more about this compliance and compliance and how it will impact your businesses. So before I start or before CA Sivasankar starts, please I'll set some ground rules to ensure a flawless experience. So all participants should remain on mute throughout the session to avoid any noise and disturbance. Please be informed that the recording for this session will be available as an on-demand webinar, and I apologize in advance if there is some network interruptions that may occur. However, we will try our best to make this experience seamless. So I'm sure you would have questions during the discussion. So please type them in the question box of your Zoom control panel. We'll bring them up towards the end. So you can type your questions and we can take the questions towards the end of the session. So before we start, let me take a moment to thank our event partners, Tally Global, who is a certified gold partner of Tally, and Premium Plus Financial Services for accepting our invite to join and contribute to add more power to SMBs in the country. So now let me just introduce the speaker, Mr. Sivasankar, who will take us through the session. So CA Sivasankar is a chartered accountant from India and UAE CA. He's a founder of Premium Plus Services and has 15 plus years of experience working on numerous engagements geared towards improving performance of companies, both financially and strategically. So he is a specialized in various sectors, including banking, manufacturing, FMCG, retail, and petroleum industry through audits, accounting, VAT advisory, AML, etc. So over to you, CA Sivasankar. You can start with your presentation, sir.
Thanks, Hakeem, for the deep introduction. Good evening, good afternoon, friends. Hope all doing good. Nice to see so many participants during mid of the day. So I was given just 40 minutes to present on the corporate tax, which is a wide topic. So we have a mixed audience today: accountants, business owners, etc. So our presentation, I made the presentation based on that, keeping that mind. So further, before wasting time, we will start on the topics. So we are going to discuss on, these are the contents we are going to talk today. So like introduction of the tax, scope, taxable person, implementation, corporate tax applicability and rate, exempt income and exempt person, carry forward set of losses, withholding tax, and transfer pricing, administrator, return filing, tax group, etc. So we'll go with the introduction first. Okay, so corporate tax. So corporate tax is a direct tax. Okay, so why we are calling this direct tax? Then you can ask whether is there any indirect tax? Yes. So everybody aware of VAT, which is implemented 5 years back. Everybody is used to so far now. So indirect tax is the indirect, VAT is the indirect tax, and corporate tax is the direct tax. Okay, why it's so called indirect and direct? So if you see the indirect VAT, you just collect from your customer and pay back to the FT authority, which is not cost to the company. So we are acting as an agent to the government. So that is called indirect tax. So now corporate tax is introduced, which has been mentioned as direct tax. Reason because we have to pay 9% rate on our business income, which is going to pay from our packet. Okay. So why this has been implemented? So this to follow the international standards for tax transparency and to prevent the harmful tax practices. If you see the many multinational companies, they are being use this non-tax zone to reduce their profit taxes. So many tax authorities finding difficult to tax the entire revenue. Why this has been, so what is the benefit for the UAE? So you can see the UAE position is increasing in the leading global hub for the business and investment. So you can see a lot of multinational companies transfer their head office or regions to UAE, which is very good and developing for the country. Okay, so which are the activities follows from under corporate tax? So all the business activities and commercial activities across the UAE Emirates. So whatever activity, business and commercial activities you do in the UAE are subject to corporate tax. Okay, so if you come to the legal entity, what are the activities covered? All activities done by the legal entity is called business activities, which is subject to corporate tax. Okay, so we'll see the individuals. Whether individuals corporate tax is applicable. Yes, if any individual do the business activity, so then it's subject to corporate tax. Their income from savings or salary, those things won't come under corporate tax. But if any activity they are in the business nature, they are subject to corporate tax. Okay, so we'll continue. So which are the industries include? All industries like banking, real estate, construction development, all other business excluding, there is some exclusion given in the law. So those excluded activities won't cover under corporate tax. All other activities and industries are covered under corporate tax. Okay, we'll see what is exclusions. Extraction of natural resources. So why this particular activity is excluded? Because those activities are already making payment to emirate level corporate taxation. What is emirate level? So if, for example, if they do the extraction of natural resources in Dubai, they are already making payment to Dubai government. And if they do the same activity in Abu Dhabi, they are already making payment to the Abu Dhabi government. So to avoid the double taxation, these activities are excluded from the corporate tax. Taxable person. Okay. So taxable person, they are telling two. We can bifurcate resident person and non-resident person. Who are the resident persons? Like a legal person incorporated in UAE. If you set up any company in UAE, including free zone, if it is a mainland or free zone company, both are resident persons. So what incomes are taxable for companies in UAE? Worldwide income. So this may be surprising or shocking to them. Nothing to worry. So whatever income generated in UAE subject to tax. So why it's calling worldwide? So if resident in UAE, if they earn business, like they have the branches outside the country, or they're earning in other way from the outside the country, those also subject to tax. But if those revenues are already taxed in other countries, then that tax credit can be taken in there. In the following slides, we can explain you clearly. Okay, so foreign legal person. So any company incorporated outside the UAE, that company has branch office or entity, permanent establishment in UAE and doing the business. Okay, now foreign legal person effectively managed and controlled in UAE. So if, for example, one company is incorporated outside the country, the company is being controlled and managed from UAE. Then that company also treated as a resident of UAE. Then that company's worldwide income also taxable in UAE. Okay, what about natural person? Natural person who conducts business activity alone is subject to taxable, which is also worldwide income. So who are the natural persons? You and me are natural persons. There are sole proprietorship, like license, civil company license, unincorporated partnership. All these persons are coming under the resident and which are subject to tax if they do the taxable supply. Okay, so non-resident. Who are non-resident? As a permanent establishment in UAE. So non-resident, so company incorporated outside the UAE, They have the branch or other permanent establishment in the UAE. So for them, the income generated from the permanent establishment in the UAE is subject to tax. Not the entire income, only income generated from the UAE branch that is subject to tax. Okay. Next one, we see derived state source income. So that we will elaborate a little bit in the next slide. So that also subject to tax in UAE. Okay, as a nexus income in the UAE, what is nexus income? This will be elaborated in the cabinet decision. So as of now, degree law has been released by the government. So there are few cabinet decisions going to released for each subjects, each topics. So we will go through one by one whenever released. Okay, so we'll see state source income. So outside non-resident company, the income derived from UAE resident person. So they can appoint, instead of forming the branch, they can appoint one person in UAE and they can generate the revenue. So in that case, whatever income generated through that person also subject to tax in UAE. So payment attributable to UAE, PE that are not taxed. So what are other incomes like UAE performed, income derived from activities performed in UAE, assets in UAE, capital investment rights, all the way, whatever way the income generated in UAE based source, that is subject to tax for the foreign companies. So next point, implementation. So this is very, very important to all the businesses in UAE because we are in the beginning stage. Okay. So what they tell you, financial year starts on or after 1st June 2023 when tax is applicable. So first we have to see what is the financial year. So now, since there is no tax in UAE so far, many companies not aware what is their financial year itself. This need to be identified first. Okay, how to identify? So if you see the mainland companies which is formed, the financial year is being mentioned in the MOA. If even from free zone companies also, it is mentioned in the MOA. If not mentioned, you can see in their website, it will be mentioned what is the financial year. If that also not there, we can communicate to the authorities and identify. So that is the first steps we have to take due to implementation of the corporate tax. Okay, we identify the financial year. We come to the conclusion that, okay, we are financial year starting from 1st June 23. So financial year is always 12 months. So if it is the 1st June 23, your tax will be applicable from 1st June 23 and ending with 31st May 2024. No, somebody will say, okay, my financial is starting from 1st October. If it is 1st October, your tax applicability from 1st October 23 until 30th September 23. So in mainland company, as I said, mostly in UAE, they are using the calendar year. So calendar year is Jan to December. So who are following on the category of calendar year, their tax liability starts from 1st January 2024 to 31st December 2024. Okay. Implementation, timeline for corporate tax implementation, this is provided by the authority. So who are falling under 1st June 23, they have 26 months from today for filing their first tax return and paying the tax. So how it is 26 months? So June to May 24 is the first financial year, and always they give 9 months time for the filing the return and paying the tax. So from the end of the financial year, so they have almost 26 months. If you see who are falling under 1st January category, they have 33 months. So almost more than 1.5 years they have to implement and bring what are the requirements and make the proper planning. Okay, so we identify the financial year. So what is the next stage? Proper accounting system. Since there is no tax or requirements for the accounting auditing in UAE, many companies, they are not maintaining their books of accounts. These things to be taken care immediately. Proper accounting systems to be implemented. See, we have to say thanks to the government implementing VAT few years back itself, due to which at least some of the business started maintaining the records in the Excel format for the sales and purchases, at least for the purpose of output and input VAT purposes. If that is not there, maybe that Excel sheet also won't be there. Okay, so is it okay? Still, we can maintain in the Excel sheet. So we suggest that may not be enough. Need to maintain the books of accounts in proper softwares. At least some basic software like Tally or a number of softwares available in the market nowadays. So which is user friendly, and we can subscribe on Tally software or any other software and start recording transaction in the books of accounts. So we'll tell what is the reason, because VAT just for the input output, we can just pay collecting from the customers and paying the net of to the but corporate tax is to be paid on the profit of the business. To arrive the right profit, we need the proper accounting process. Otherwise, it will be very, very difficult. Okay, so we bought the software. Who will be going to the process of the entries? So you may appoint some person who have the accounting knowledge, basic accounting knowledge at least. Okay, if that also you think it's difficult, you can give it to the outsourcing. There are a number of accounting firms are there. You can give to the accounting outsourcing. Then, okay, you given to the outsourcing or appoint your own accountant. So what? So I'm telling to the accountants who are maintaining the books, please maintain proper chart of accounts. Prepare chart of accounts. Why? What is there in the chart of accounts? See, this is okay. You are maintaining the books, making entries properly into arrive the profit. What is that? Revenue minus expense profit. Okay. If you see in the law, there are so many disallowed, allowed expenses are there. How you will work on that? If you didn't maintain the proper chart of accounts, it will be very, very tough to arrive the taxable income for the tax purpose, VAT purpose. So just book profit cannot be treated as for the calculating the tax. Okay, so separate. Okay, so we're coming to the business owners now. If you see the general culture here, there is no segregation of personal nature transactions and business transactions. There are many owners, what they're thinking, so this is my company, I can do whatever you want. So those things to be changed. See, I can say, see, once you incorporate the company, so the company become a legal person. That will become one more person, like you and me, company become one more person. So as a shareholder, you have the rights from the company to have get the dividend from the company. Apart from that, there is no other rights in general. Okay, so but if you are involving the day-to-day business, that is you are acting as a director or managing director or manager, whatever it's called. So you are using different caps for the same company, but for the ownership purpose, you have the rights only only have the rights of taking the dividend. So that's the reason you have to segregate personal nature of transactions, commercial, that means of business nature of transactions. That is very, very important. Okay, all things are done. So when we start the booking, so you can say our company, my company tax is applicable from 1st January 2024. I will start from that day. No, that is not correct. So if you start the business accounting system from 1st January 2024, you have to bring back the opening balance of that year, which is closing balance of 2023. So those figures should be proper in line with internationally accepted accounting standards. So for which what you have to do, you have to start accounting the transactions from 2023 itself. So that only it can be, the closing balance can be as per the international reporting standards. So that closing balance can be accepted for the opening balance of next year. So you can use this period as a cleaning period, that whatever difference is there, whatever you are mixing up personal business, everything can be cleaned up this period. You have enough time for the 1 year to make the proper chart of accounts, maintaining books, everything. So this will give good clear picture. Okay, so we will see the applicability on individuals. Okay, so I am an individual, whether tax is applicable to me or not. So individuals who are getting salaries from the company, corporate tax is not applicable. So it's corporate tax is a business tax, not for the individual tax. Okay. So I'm an individual. I put some savings in the bank. I'm getting interest on that. Whether it's taxable? No, it's not. Okay. Through my savings, I brought some properties. From the properties, I'm getting lease and I'm selling the property, I'm getting the gain. Whether that is taxable? No, that is also not taxable. Okay. I am the investor. I invested in one company in UAE. I am the shareholder. I am getting dividends from the company and I'm transferring the shares and getting some capital gains. Whether these are taxable? No, those are not taxable. Okay, what is taxable? If as an individual, I am doing some business activities, either through the license or without the license. If I'm doing business activities and earning money, those are subject to tax, corporate tax. Okay, I doesn't have the license, I'm doing the business, how I am taxable? As per the tax law, if you have the license, if it doesn't have the license, you have to pay tax. Then how about license part? That is a different authority. Then you will get the notice from them. That is different part. Okay, so take care if anybody doing the business as a freelancer or something like that. So you have to plan accordingly before end of this year. Okay, I'm a foreign person. Whether tax, how the tax is applicable. So foreign person, if they're doing trade or business in the UAE or ongoing or regular matter. If foreign non-resident person, if they do business in UAE, that is subject to tax. Okay, I'm an individual foreign person. I'm getting dividends as what we see on the individual person, getting dividends, I'm getting capital gains, I'm getting interest on savings in the UAE or other investment returns, whether those things are subject to that? No. For individuals, if you get on the non-business activities, only on the savings or salary or something, that is not subject to tax. Okay. So free zone. So always, if you see while implementing that also, there is a different concept called designated zone. So here also there is some qualifying income, those and all there. So that further still we are waiting for the cabinet decision. Okay. So free zones. Whether free zone is subject to corporate tax. In general, I can say yes, it's subject to corporate tax. Okay. If you see all the free zones, most of the free zones, they're given the tax holiday period. Like for example, if you see DMCC, they mention clearly 50 years tax holiday period. That means from the date of incorporation of the company, 50 years they need not to pay. If you incurred the company 10 years back, so another 40 years tax is not applicable to you. If the company with all regulatory requirements, so each company, each free zone authority have some regulatory requirements. If the company follows that and do not do business with the mainland company, so if you follow these criteria and within the tax holiday period, free company tax is not applicable to the free zone company. Okay. If free zone company is required to register for VAT and file the return, yes, it is taxable or non-taxable, suggestible to register and file the corporate tax return every year. So if it is a financial free zones, there is financial like DAFC, ADGM. What about that? So as per corporate law, corporate tax law, there is no differentiation of financial free zone or regular free zone. All the free zones are treated as a same. Okay. So what qualifies free zone 0%? If so, they are within that 50 years category and they are following the requirements of the free zone and they are not doing the business with mainland. If all the conditions they are following, they have to ensure that they maintain these 5-6 points. Okay, what is that? Maintain adequate substance. What is adequate substance? You see, UAE is started implementing so many regulations from 2017. In 2017, they implemented excess tax. 2018, VAT. 2019, ESR and CBCR. Now it is in corporate tax. So adequate substance, nothing but ESI, economic substance regulations. But all the free zones companies who want to qualify them as a free zone, they have to maintain the adequate substance. What is adequate substance? That is entirely separate topic. So in short, I will tell you. So it should be maintained, controlled, and decisions should be maintained, taken from the UAE. Controlled and management should be in UAE, and they should have the adequate resource to run the business. What are the adequate resources? Like office, employees, assets, whatever required to run the business should be in place in the UAE. So there is I'm telling just overall. So there are lots of things required. So they have to maintain the adequate substance. Derives qualified income. So what is qualified income? So yet to be defined. We are waiting for the cabinet decision. So the company should not elected for 9% tax. So any times UAE free zone company can elect for pay the 9% tax. They tell, okay, I don't want free zone facilities at all. Like 0%, I can pay 9% tax in line with mainland. So they should not be elected for regular taxation. Means transfer pricing requirement. So transfer pricing when it's applicable. If you do transaction between the related parties, transfer pricing is required. So what is transfer pricing? It's a wide topic. So that takes another few hours to cover those things. So transfer pricing in short, if you do any transaction with the related parties, we have to maintain some records and ensure the transaction happen with market value. Okay, who are the related parties? That is, again, it's a big short. So like your owner of the company, directors of the company, officers of the company, all are related parties. So only these three or few employee directors? No. So relatives of these persons also become a related party. It runs like last 4 generations in up and bottom line, like parents, grandparents, great parents in upper line, and below son, grandson, great grandson, like that. So 4 stages it will run. So that is a huge things we have to be taken care. But whatever transaction company is doing with them, it should be in market value, in line with market value. That is a major things. So any other condition determined by the ministry. If ministry determine some other conditions to be followed by the free zone companies, that also to be followed. If all these things are followed, then only free zones are subject to 0%. Okay. So main thing, corporate tax rate. So how much I have to pay tax? So you are arriving the taxable income. How you are arriving? Like sales minus all the company expenses, purchases, expenses, you are arriving the book profit. Is the book profit is my taxable income? No. There are so many expenses allowed, partially allowed, fully allowed, disallowed, so many categories are there. So we have to make adjustment for all the categories, and finally we have to arrive the taxable income for the particular year. Okay, my taxable income is 375,000. How much we have to pay? 0%. So up to 375,000 is a 0% rate. Okay, my taxable income is 500,000. How much I have to pay? The amount over and above 375,000. Say if it is 500,000, you have to pay 9% on 125,000 dirhams. Okay, what about multinational companies? See, multinational companies who are having their global consolidated business revenue for more than 3.15 billion, they have a different tax rate. So obviously, which is more than 9%, which is as per the OECD guidelines. Exempt income. So which are exempt from tax? Dividend from a UAE entity. So as a shareholder, you are getting dividend from the UAE-based entity, which is exempt from tax. Okay. So I'm getting dividend from foreign entity, not UAE-based entity. Whether it is exempt tax, yes, that also exempt tax, subject to participation interest. What is participation interest? So you should have at least 5% of the company's share from the foreign entity. It can be more, but it should be at least. Okay. So one is dividend. Another one, I'm getting capital gains and other income from the shares. Like, so we are holding the shares, you're selling after some time, you are getting some gains. Whether that is subject to tax, yes, that is not subject to tax, but subject to participation. Same, you should hold minimum 5% ownership of the company. Okay. Apart from dividend and capital gains, any non-residents of gaining income from operating of leasing of aircrafts, ships in international transportation. So that also exempt from corporate tax. Exempt persons, that is, we can see automatically exempt. Okay, what are things automatically? Government entities, government controlled entities. These are not subject to tax. So next, exempt if notified, we say ministry already notified extractive business and non-extractive natural resource business. This business which is paying the corporate tax at Emirates level. So these business are not subject to corporate tax. Okay. So in cabinet decision, through cabinet decision, they may list few qualified public benefit entities that also come under exempted category. There are few funds, private, public funds, social security funds, qualifying investment and government funds. These funds can apply to the FTA for the exemption. And if FTA is approved, these funds also comes under exempt category. Okay, so as I said before, taxable income. There are sometimes deductible and not deductible. It's very, very important topic. So just book profit is not a taxable income. So we have to derive separately from book profit. Okay. So what are not allowed? Bribes. So there is no discussion. That name itself is show. Okay. In the running the business, you may be paying some money that is not allowed for the arriving the taxable income. Okay. Fines and penalties. If you may be paying some fines, vehicle fines or late registration fines or etc. to the government authorities and all, that is also not allowed to treat it as expenses to arrive the taxable income. But sometimes you make payment to the contractors or customers or something due to the breach of contract. So, for example, you agreed with some customer to supply in within certain period. That may be delay. If delay, there will be some penalties. Those things can be allowed as expenditure for computing the taxable income, but not the fines and penalties. Okay, you are making donations, grants, gifts, and all. That is also not allowable expense. But if the gifts, donations are making to the public benefit entity, that is allowed. Dividend or profit distribution. From the profit of the company, you are distributing some dividend to the shareholders. That cannot be deducted as expenses to generating to arriving the taxable income. So you paying tax, foreign tax, corporate tax, and all. That also cannot be treated as an expenditure to arrive the taxable income. Okay, you are spending some expenses to generate exempted income. So those expenses also not allowed to arrive the taxable income. So you remember, I mentioned before, chart of accounts. If you maintain properly on these categories under the chart of accounts, then it will be easy arriving the taxable income. Otherwise, it will be going to be a very tedious work. So this is fully deductible. If you see the next one, partial deduction. That means like entertainment expenditure. Entertainment expenditure, it's allowed 50% of the actual expenses. Like for example, you are making arranging some meals, accommodation, transportation, or some amusement acquisition expenses for the customer, shareholders, suppliers, business partners, everybody. Those expenses are allowed 50% of actual expenses. So these things to be maintained in separate line item in the books. Okay, interest expenditure. So you're getting loans from the bank and making payment. So you can see nowadays that interest rates are very, very high from the banks. So whether we can take, see that loan you are taking for the business purpose only, but interest being that is a business income, business expense, interest expenditure. Whether can we claim fully? No, there is a capping rule. So what is the capping rule? 30% of EBITDA. Net interest expenditure deductible. So for example, you are having 10,000 as a your expense, your interest expense. Say for example, you have the EBITDA So earning before interest, tax, and depreciation and adjustment, amortization. So your EBITDA also 10,000. You can ask whether I can deduct the entire interest with 10,000 from the EBITDA. No, it is allowed only 30%. So EBITDA is 10,000. You can set off the interest expenditure only 30%. That means 3,000 current year. Okay, what happening to the balance? Balance you can carry forward to the next year. So they are not telling that disallowed. You can carry forward to the next year. So there may be some threshold limit through the capitation can be given, like whichever is higher. Okay, so you're telling that 70% can be carried forward. How many years we can carry forward? We can carry forward maximum 10 years. So for example, if you incurred interest this year, you are unable to deduct fully, you can carry forward from today for next 10 years. Okay. You can tell that this year my company is loss. What shall I do? Obviously, you cannot claim from the company, but that loss can be carried forward to the next years. How many years? N number of years. There is no limit. Okay. What will carry forward? You can carry forward this year your loss. Next year you'll get the profit. You can carry forward this profit and adjust with the next year profit. So you can ask, okay, entire amount can I adjust? Yes. No. Again, there is a condition. How much I can deduct? 75% of the next year profit. If, for example, you are carry forward 100,000 to the next year, how much you can deduct? So next year you are getting 200,000, 150,000 as a your profit. So you can deduct only 75% of that 150,000, not the entire 100,000. So based on that, we have to present. Okay. Losses from effective date. So the corporate tax is applicable from this year. I have the losses for last year also. That can be carried forward? No. So that can be carried forward only from the effective date of the corporate tax. If your company effective days for your company is 1st January 24, if your first year there is a loss, from that year 24 loss can be carried forward, not the previous loss. Okay. So what about tax losses of the group? Tax losses of your group companies can be set off with profitable companies. So total group can be treated as a one organization. So one company loss, if another company is profit, so there you can adjust between those companies. Okay, so who are having more than one company, so you can plan accordingly to form a tax group. So how much I can set off? I told you. So only 75% of that year taxable income can be set off. So losses can be carried forward n number of years. There is no limit. Only interest have the limit of 10 years. With losses, there is no limit. You can keep on carry forward. Okay. So withholding tax deducted at source. So if you are dealing with Saudi or India, if you do any service to that countries, they will be deducting some amount as a tax while making payment. So your customers, while making payment to you, they will be deduct some tax amount. So luckily in UAE, they said 0% to non-residents. For non-residents, they need not to deduct. So the tax withholding is 0%. That means they need not to deduct any TDS, and there is no filing or nothing. So transaction between the UAE residents. So if any transaction happening between UAE residents, it's not applicable at all. So this is a huge relief for the businesses now. Otherwise, it's going to be a very huge work for the accountants as well as the business owners. Tax credit. Yeah. See, I told you. So if there are residents, the worldwide income is taxable. For example, if doing income business in UAE and you are doing business outside the country, also they have a branch outside the country or something. So worldwide income, all the business wide income is taxable here. So if you have a branch outside the country and that branch is subject to tax in that country, So they're paying tax that also. Whether it's a double taxation? No. So whatever you paid in that country, that can be taken as a credit while calculating your tax in UAE. So transfer pricing is a huge topic. So which is applicable if you do the transaction between the related parties. Okay, so I said who are the related parties. If any transaction happen between the relatives, you have to ensure that the transactions are happening in the market price. So always, if you do the transaction with the related parties, there is a possibility to the low price or below the cost price and all. So those things to be avoided. It should be carried out arm's length trades. So there are rules and document requirements has been prescribed by the OECD transfer pricing guidelines. It's again, I'm telling it's a huge topic, so we can cover another day. Okay, administrator. What is the role of FDA? So which is acting as administration and collection and enforcement. Ministry of Finance, which is competent for bilateral or multilateral agreements and international exchange of information for tax purposes. So as I said, that 2019 they implemented CBCR and ESR. CBCR is country by country reporting requirements. So any important communications or high risk profiles has to be communicated internationally. So which is under Ministry of Finance. Return filing and advance tax. So return filing, when we have to file the return. So return to be filed from within 9 months from the end of the first financial year where you are subject to tax. So most of the companies come in calendar years, and that company, so from January to December 24, the first tax return filing and payment should happen before 30th September 2025. 9 months period is given. So within that, we have to register, file the return, and make the payment. There is no advance tax requirement in UAE. That is also big relief. Otherwise, that is an additional work for user. So penalties, yes, for non-compliance is penalties there. So it has to be registered and file the return and pay the tax amount within the stipulated time. Whereas the penalties are not deductible expenses. So even though you pay, you cannot treat it as expenses for the tax computation. Tax group, which is very important for the owners who have the more than one companies. So either in UAE or outside the countries, they have to think on how to form a group. They can think, so calculate and see if it is a beneficial, they can form a group. So there are some conditions, there are a few conditions. Everything have with certain conditions. So one is that all the group companies can file only single return. So it's not necessary to file each company or return if it is more than one company. If you form the group, it is that. Okay. So we'll see what are the conditions. If you parent subsidiary companies. So parents should have at least 95% of voting rights in the subsidiary companies. So in the group, their qualifying free zone or exempt persons cannot be part of the tax group. So all the group companies should maintain the same accounting standard, and that financial year also should be the same. So for example, if you have tax group, they have the 3 companies. One company is following different accounting rules, another company is following it. That is not possible. So that we cannot form the tax group. And financial year, like starting from 1st June or 1st October or 1st January. So if all the companies following the same financial year, then only they can form the tax group. Okay. So process, how do you do that? So parent company and each subsidiary must all the companies to apply for the tax group formation. Application will be reviewed by the authority. They will approve. Okay, so they have to prepare the consolidated financial statements and tax liability laws. They have to see that prepare the consolidated financial, not the individual company. Apart from that, they have to prepare the consolidated financial statement. Okay, who will file the tax return? Parent company holds the responsibility. So parent company will file the return on behalf of the subsidiaries. and they will pay the tax amount also. But liability lies with all the companies jointly and severally. So any questions we can start clarifying.
Sir, we have got first of all, I'll just run a poll.
Yeah.
So everyone can take part in the poll. Okay. So, sir, we have got a couple of questions. So one question is, do you need any registration? Do you need any registered auditor required for corporate tax, or any auditors are okay?
No. So there is any auditor is okay. There is no specific requirement. Registered auditor or any auditor is okay. First of all, there is audit return. Audit is not mandatory for all the companies. So who all need to do the audit, that will be specified for the cabinet decision. So that also not clear so far. So there is no list of registered auditor or something like that. Any audit is okay.
Okay. And so then corporate tax is also applicable for free zone companies?
Yes, it is applicable if they didn't follow all the conditions required. There are so few conditions. They have to comply with all the conditions. Then it's 0%. If not, 9% is applicable.
Okay. Then one more question, sir. Free zone and mainland company can be in the same tax group?
No, that's not possible. If everything, that is if the free zone company also elected to pay 9%, then it's possible.
Okay, and so we have one more last question. So is there any registration process for this when to do this? And once again, is there a registration process for this, and when to do this? What is the deadline?
Okay, so it's there is some relaxation, but yes, registration is mandatory, but there is no cutoff time. So you have to register within this time. But before your first VAT return date, you have to register.
Okay.
And there is no penalty for the late registration. So that is a good news.
Okay. Should we have maintain a separate P&L for corporate tax excluding penalty and fine?
Not like that. See, so books of accounts will be only one, but each year from the profit from the book profit, you have to arrive the taxable income. So as I said, there are allowed, disallowed, partially allowed expenses. Those adjustment has to be made. Okay. So not a books separate calculation.
If free zone company is liable for corporate tax, then on what condition we can get exemptions from corporate tax?
That's it. There are 4 or 5 conditions. They have to maintain the economic substance, and they have to follow the regulations given by the free zone authority. There are a number of conditions. If you fulfill all the conditions, then they will fall under 0% rate.
So we have a question from Jay Rathod that where to register?
All online. So now we are used to use the FTA portal for the VAT purpose. Same portal, same login ID. You can see in the tax, corporate tax is available now. You can start registration now.
Okay, so I'll just pick any. We have a lot of questions more. So
yeah, please. Hope we have enough time.
Yes. So can we change the tax period starting from 30th June 2023 to 1st January 2024?
Can you repeat?
Can you change the tax period starting from 30th June 2023 to 1st January 2024?
No, it always should start from the beginning of the calendar month, at least. And it should be in your record, in your legal documents. You cannot change the legal documents. You have to go through and identify over the taxable period. So if it is mentioned in the legal documents, you can follow that.
Okay. What if a person have 2 companies and follow different financial year? Can they report separately?
Yeah, because they are not eligible to become a tax group because they are following different tax period or financial things. They cannot form your tax period, they have to file separate tax returns.
One second. Yeah. Salary and allowance can be considered in analyzing profit?
No, salary is not subject to tax. That is exempt. So you can use your money, entire money for yourself.
Okay. And the last question is, can 3 companies with different licenses under same ownership can be treated as group corporate tax?
Yes, that can be possible if they follow some conditions, like all the 3 companies are using the same financial year, following the same accounting standards. Not any company is coming under exempt category. If they follow all the conditions, they can be.
So we'll take the last questions. We have 2-3 questions more, but they can always contact you. So all expenses which covers office expenses, including petrol expenses, are considered before calculating profit.
Yes. So see, VAT have separate rules. So if the vehicles are 100% used for the company purpose, then only vehicle related are allowed to take the input credit. But in corporate tax, you are sure that is for the business purpose. All the expenses can be deducted.
Okay. So, sir, like this comes to the end of the presentation, and sir, it was very insightful and very informative, to be honest. And we have got still we have got questions. So you can always contact. These are details of CA Sivasankar. You can contact him through email, through WhatsApp, through calling, or you can directly walk in his office. He's ready to serve you and he's ready to explain you in more detail. So just take the screenshot. Just everyone just can take this details, and yeah, can I have a copy of the presentation, sir?
Yes, we can share to the registered mail ID. We can share.
Yes.
Hello. Can I ask one question?
Yeah.
Yeah. We already started a business 3 months before, and till now we didn't get the TRN number. So how we can we can prepare the tax invoice?
No. So you are asking on VAT perspective, I think.
Yeah. It's
you are already applied for the VAT, right? TRN number you applied already?
Yeah, we already applied, but it is not yet approved, so we don't have any TRN number for that one.
See, so anyway, this is a different topic. Topic is corporate tax. You are talking about the VAT. So your responsibility to apply to TRN number once it reaches the required threshold limit. If there is a delay from the authority, nothing to worry. So you keep following them. So they are taking normally 20 working days. You keep following them alternate days, once in a week, or send mail, call them, and follow for that TRN number. But if you applied on time, as per the threshold requirement, there is nothing to worry. You can continue your business without tax.
So
you cannot claim the tax. No, it's a normal invoice. A regular invoice you have to raise to the customers, not the tax invoice.
Okay.
Thank you.
Thank you.
Any more questions are there? You can contact him now. So this brings to the end. Now, after such a healthy discussion, I'm sure we are able to offer a great clarity on the subject. And however, we understand that due to limited time in hand, there are questions that are remain unanswered. So we will be you can always reach out to CA Sivasankar and he will clear your doubts. So with more clarity flowing in, we aim to host more such sessions in the coming days and weeks. So we request every one of you to stay tuned and register for all the upcoming events to stay updated on the news. In case you have any more questions, you can write to us at gcc.events@tallysolutions.com, or you can always contact as you have taken screenshot of CA Siva, so you can contact him and you can clear your doubts with him. So I would like to thank the speaker CA Sivasankar for accepting our invite and delivering an insightful session and our gold partner as well, Tally Global, for powering this event. A big thanks to each one of you for accepting an invitation and taking out your valuable time to attend this webinar. We appreciate you being here and have a wonderful week ahead. Thank you.